Hello investors, my name is Dehan. Welcome back to number one place for all your investing needs. In today's video, we're going to be talking about dividend stocks and why it is a lot easier right now to live off of dividends than it ever has before. With passive income that you're going to be receiving from these dividend yields, you could be living while you're just sitting at home, retired, and creating that passive income flow like a snowball effect. As the more it grows, the more dividends you're going to be receiving, and the easier you're going to be able to live in the long term. So this is a long-term game, obviously, with dividends. It is not a get-rich type situation like, crypto and other stocks that we followed in the past, like tech stocks. This is pretty much the roots that I started with when I started making YouTube videos. I talked about dividend stocks, and we're going to start getting back into that. So we're going to be discussing a lot of these dividend companies, looking at the graph that I've made here. So this is a Google sheet that I've made myself where it has different things on here. So first of all, as you guys can see, we have the ticker name, we have the company right there, Apple, the 365-day chart that is actually active right here, and it changes day by day. We have the actual price for the stock currently that is about 20 minutes delayed from the actual market, how much it actually went up in dollars, how much it went up in percentages, and then obviously we have the dividend yield that it's going to be, giving out every single year, the annual payout that's going to be, receiving, the ex-dividend date, which updates every time, the dividend date updates as well. We have the 7-day price, 30-day price, 7-day percentage, 30-day percentage, the market cap of the stock, and obviously the PE of the stock as well. Now guys, before we get into this content, go ahead and smash that like button for me. Let's aim for 50 plus likes on this video. Subscribe to the channel, turn on that bell notifications to get notified every time I make a new video. And as always, leave a comment below letting me know which dividend stocks are your favorite to hold in your portfolio. So what we're going to do right now is actually take, some of these stocks and look at how much you'd be receiving if you would invest, let's just say $100,000 into one of these stocks, and how much you would be receiving in dividends, just to show you an example of how easy it is to live from, some of these dividends and just receive passive income because you're still holding the stock. Now, obviously, most of these are not growth stocks, so they're not going to be going up a lot, changing price, but you're receiving passive income. And it is kind of like a recession hedge because most of the time these stocks will outperform the market in a downtrend or a recession type situation, or even with inflation and different things like that. So let's take a quick look and use Apple as an example. So if you would have had $100,000 into Apple, obviously it's 163.98 per share, which would give you about 609 shares. So if we multiply that by the annual payout, which is about 88 cents per share that you're going to be receiving, so 0.88 equals, you would be receiving $536 just in dividends from Apple. So just for holding Apple, you're going to be receiving about $500 passive income that you can do whatever you want with. Obviously, you can reinvest it or do whatever you want. Now, let's actually scroll down here and find, a little bit of a higher dividend, another stock. So if we take a look down here, actually Verizon. So let's use Verizon as an example right here. So if we had $100,000 in Verizon, Verizon is currently at $50.80 per share, which would give you about 1,968 shares. So let's just do that real quick. And then obviously Verizon is paying out around $2.56 per year for the annual payout. So $2.56, you would be receiving $5,000.38 in dividends from a Verizon. So $5,000 in passive income for just holding Verizon stock. And obviously, if the stock trends on higher, you're going to be making even more profits. If it trends on lower, you're going to be obviously losing a little bit. But as long as you're planning to hold in the long term, you would be winning because $5,000 of that is already locked in, which means you can take that dividend that you're going to be receiving with a Verizon and reinvest it into more Verizon shares or whatever shares you want to, invest in. Now, there's obviously other options you guys can take a look at. There's many options out there, like SPHD is another one. So the Invesco S&P 500 high dividend, low volatility ETF. It's one of my favorite ETFs actually for dividends. It pays out about a 3.72% dividend. And obviously, this is holding all, 500 of the high dividend, low volatility stocks in it from the S&P 500. So let's take a quick look at this one because it is kind of like a safer method to be invested in. So if you would invest $100,000 into this one, it'll be at $45.74. You would receive about 2,186 shares. And if we actually do the math on that one, you would receive about $1.70 annually from that one. So $1.70, if you do the math right there, $3,716 just in passive income from holding that one, which means about a 3.7% return right there, guaranteed every single year. Even if the market goes down, you're going to be receiving this dividend as long as you're holding these shares, which is a positive, obviously, especially in a market like this. If we actually take a look at the market, just take a look at the past 5 days. What has happened in the market? Well, in the past 5 days, the market started to rally. So we've seen a little bit of a comeback here. We're up about 5.3% on the Dow Jones. In the past month, we're actually up about 3.4%. But here on the 6-month chart, we can see that it's only up about 2%. But look at the highs that we were trading at one point right here in January 4th. We were trading at around 36,799 points. We went all the way down here from the top to the bottom. We were down about 11% from the high to the low down here. So 11% down, and now we're seeing this recovery of about 6.5%. So as this market was climbing down, a lot of people started to panic. So dividend investors were still winning. If we actually take a look here at stocks like Coca-Cola, here, you were still receiving that dividend, even though everything kind of fell down since January here. If you actually take a look here on Coke is actually not that much down. It's only down about 2% here since that, peak that we had in January where it started to downtrend. So Coca-Cola is still doing very well, still paying out that dividend down there. As you guys can see, about a 2.93% dividend, which is beautiful. So Coca-Cola is still giving that dividend. And even here from the peak to the low, we were only down about 7.8% compared to some of these other stocks that were down a lot more than that. So as you're just holding these stocks for the long term, you're creating this passive income. The passive income is, getting into a snowball type situation where the more you're crumbling and, going down that hill, the more income you're getting, you can reinvest it into your dividend portfolio, and that means you're going to be receiving even more dividends in the future. So annually, you'll be receiving, let's just say, an average between 2 and 5%, depending on which type of stocks you're holding in your portfolio, and you're going to be guaranteed that. And maybe even these companies will increase their dividend, which means that your passive income could become even boosted. But obviously, if stocks start to fall down, that could be an opportunity for you to get even more shares of these companies and reinvest even more. And that way, when the stocks tend to come back up, you're going to be receiving even more dividends on your companies that you bought in the long term. So dip opportunities are obviously great for dividend investors because that gives them a chance to buy cheaper and wait for that stock to get up higher, because as the price increases, obviously that 3% becomes a little bit higher, because if you buy a stock at $100 and it's a 3% dividend yield, you're going to be receiving, let's just say, $3 on that $100 if it's a 3% yield. But if that stock goes up to $200 per share, that 3% becomes $6 in passive income per share, which is a lot more. So as these prices increase for your stocks, that is a positive thing for your obviously portfolio. So guys, let's just look at some of the other examples we have on here as well. So look at this. So we have Clorox, CLX. So if we take a look here at the chart, it's been on a downtrend in the past 365 days. Obviously, this was one when the Rona started going. This one was a very big one, and now we're seeing a little bit of a sell-off going with it. Current price, $133. And this is why I love this chart, because it gives me everything that I need to see. It's up about $1.14 in the past trading day, which is about 0.9%, almost 1%. Dividend yield is at 3.47%, which means on $100,000, you'll be receiving almost $3,500 in dividends every single year. If we scroll here to the right, we're going to be looking at this as well. $4.64 per share on this one. The dividend yield, I have this column right here, which gives me the date of the exact date we're going to be receiving this dividend. So this one's going to be paying April 26, 2022. And obviously, in the past 7 days, this one is, this is the trading level we're seeing. Then the 30-day, that's the level where we're trading at. 7-day, we're obviously up about 0.3%. On the 30-day, we're down about 8.5%. It's a $16 billion market cap with a 67 PE. So that's obviously all the things that you need to be worried about when you're investing. Just take a look and see if it fits your criteria. If the dividend yield is too high, there's a reason for it. It's probably not as safe as some of the ones that are lower. Usually, I tend to stay around 4% or so. If it gets above 4%, there's a catch to it usually, or it's a little bit more volatile, so there's a higher risk with those ones. I tend to stick around a 3 to 4% yield myself when I'm looking at dividend stocks for the long term. So those are some of the things that I personally look at when I'm investing in dividend stocks. And right now, like I said, it's the easiest time to be living from your dividends and receiving passive income. As things are increasing, the dividend yields are increasing. A lot of these companies are dividend kings. As they continue to raise their dividends every single year in and year out. So there's definitely positive things to investing in dividend stocks, and it's one of the more beautiful things. I mean, just take a look at Warren Buffett and the things that he's doing. I mean, Coca-Cola, he's making so much money from his Coca-Cola dividends that I'm sure that he could just live off of that from now on. as he is a very, very cheap person and doesn't need much to live off of them. So dividends, in my opinion, one of the greatest things to invest in, guys. So let me know in the comments below, which dividend stocks are you holding in your portfolio? What dividend stocks would you like me to talk about? We will discuss anything you guys want to hear about on this channel. As long as you guys ask me, I will make content about it. I will be showing you guys my dividend portfolio that I will be starting to create once again. I used to have a dividend portfolio back in the day. I sold all of that off and started to get more into growth stocks, but now I want to start up a dividend portfolio just to show you guys the power that dividends can give out. But before we end that topic, I actually want to show you a chart of my previous dividend yields that when I used to invest in dividends and how well it worked out for me. So pretty much dividends, I started to invest into dividends here in April of 2019. And over a course of about a year and a half, you can see how much dividends start to increase. So the more I invested into my portfolio, the more I would be get paid out every single month. Now obviously some stocks pay out every quarter, some pay out annually, and then some even pay out monthly. So the monthly dividends get a lot of attention because people like to see that income a lot more frequently. So we're going to take a look here. Let's take a look. Here in April of 2019, my first month of dividends, I received only $1.26. As you can see, it continued to increase here to $6, $9. Then we saw here in July at $28.77. Now you're going to see a pattern where every 3 months on that quarterly dividend, we see a little bit of a bump because, on that monthly chart, I'm not getting a consistent flow. So we can see right here as well, as it continues to grow here in September, $33. Then a little bit of a downtrend here for about 2 months. And then next one here in December of 2019, $36, $32, and then $20 in February. I increased my positions. Boom. In March, I received $57 in dividend income. And then June, one of the next biggest ones, $77.99. And then my highest ever was here in September of 2020. I received $103 in passive income in just 1 month from dividends, which means in 1 year, I could have possibly earned over $1,000 in dividends. But just taking a look at the difference here from $1.26 in the beginning when I first started investing, as I continue to put more money into the portfolio, all the way to $103 per month, in dividends. That is a huge increase that we saw right there, and definitely something that, makes you want to get more into these dividends and just shows you the opportunities that are out there to make more, income. So obviously, if you're retired with $1, $2, or $3 million, let's say in the bank, you could invest into some of these dividend stocks, earn passive income, use that passive income to pay your expenses, and then live off of the passive income, obviously. So that is the goal that everybody wants, guys. So, guys, as always, smash that like button for me if you enjoy this type of content. Subscribe to the channel, turn on that bell notifications to get notified every time I make a new video. As always, leave a comment below letting me know which cryptocurrencies, dividend stocks, and regular stocks you guys are looking at, and we'll talk about it in our next videos. I hope you guys enjoyed, and I hope to see you guys in the next one. Goodbye. Have a great week.